Jamie Saettele, climb that mountain.
Hold on.
Bring your waves to the summit. Here he is.
There you go.
Welcome
Okay.
to our summit, Jamie.
Can you guys hear me?
Yeah, can hear you, can see your chart. Welcome.
Okay. Welcome. So first of all, thank you so much for having me. And second, I was talking to Steve about this last week. I apologize. I do not have a webcam right now.
Don't worry, Jamie.
Okay,
It's
yeah,
probably
fine.
better for it's probably better for everybody because with this whole quarantine thing, I haven't been shaving and I look like a
me.
I look
You
like,
look like me.
I look like a grizzly bear. So so
Are you are you still are you a bear or are you just grizzly, buddy?
No, I mean it's like more like Sasquatch.
Jamie,
What are we
from what I
looking
see,
at here? Oh,
from what I
GDX.
see, you want to pick up the baton from where Peter Schiff left it by showing us the long-term breakout in the GDX, right?
Well, so yeah, so my my presentation, I'm going to be running through a tool that I use based on volume. And before I get to that presentation, I wanted to share this because I thought it was a good segue. And you'll see these blue bars here. Okay, this is a weekly chart of GDX.
Yeah.
All right. This is weekly, so each bar here is going to be a week, and you've got 3 volume buy signals, okay, on this chart going back to 2012. One was here in May of 2012. One was back here in November of 2014, and that one, you know, really wouldn't have worked out all that great from a timing perspective, unless I guess you just held on. And one was actually the week of March 20th. So I thought it was a good segue to go into using this this tool, you know, and applying it to what's happening right now. So before we get into this, let's view the slideshow. All right.
Speaking of which, Jamie, they first managed to get everybody that was bullish kicked out of the market in the GDX, I mean, before it reversed higher. So it was like very devious.
Yes, of course, absolutely. And we've kind of seen a similar move with, hold on, we've seen a similar move with the dollar here on both directions. All right, hold on, let me get the slideshow going. Okay, so this presentation or method actually was born out of an article that I wrote for Stocks, Futures, and Options magazine back in like 2008. So, you know, it's a while ago. And the idea is simply to have a process where you're listening to the market rather than trying to predict. And that's really what Jesse Livermore, those of you who are not familiar with who Jesse Livermore is, just Google him and you can read about him. He was known as kind of one of the greatest traders of all time, did not end up listening to his own rules, and that's kind of what did him in. But what I say Livermore logic, trading logic, is basically volume logic, okay? He followed the market where it was headed, but he watched for clues that the market was changing. His process and his method, he called it his pivotal points method. And we, you know, refer to pivots, you know, like as floor pivots or something. Pivot just means change. So he was looking for the market to tell him clues of when things were changing, right? When it was getting loud, when it was time to go against the crowd. You know, some quotes here just about him. He was a speculator. He would pick his battles more than jumping in and out. Early in his early days, he was kind of a scalper in the bucket shops, but eventually he was kind of a big swing position trader. Now, this part's important. He thought that picking tops and bottoms was for fools, but he also often found himself buying close to bottoms and selling close to tops, right? This was a result of his process, and that's important. He wasn't trying to trade the top and trade the bottom. That's just what the information that he was taking in, that's, you know, ended up being his result. So here's a good quote from him. He always wanted to trade along the line of least resistance, generally moving along with the crowd, the herd most of the time. but always hunting for clues to change, ready to separate myself from the popular thinking, the group thinking, and go the opposite way. Now, keep in mind, this stuff is, this is from the early 1900s. It never changes, okay? These major changes in trends were hard to catch, but I did not want to ride the sled downhill with the crowd unless I'd sold stock short. Now, this reminds me of Dixon Watts, who was a cotton trader in the 1800s and somewhat of a philosopher to traders, if you will. And he had a famous quote that he would say, "Go cautiously with the crowd and boldly against the crowd."
Like that.
Yes. So, definitely appropriate in today's market, right? So he defined pivotal points as days that contained heavy volume. After a big move, big increase in volume was a key signal that the market was the end of its move. So rather than exit right away, he would wait for the market to roll over. And so, these quotes here, this is the logic that I've coded into the volume. And you'll see as we look through some of these charts. Okay, heavy volume often present not just at the end of a move, but also in the middle. If you think of Elliott wave, that's appropriate here because a third wave, right, or a fifth wave, you'll often have big moves in the middle and at the end. Okay, so here is the volume reversal logic. And what we're going to do here is we're going to go through a bunch of charts so you can see how this looks visually. But I have two signals that I follow, and they're on all different time frames, okay? I'm going to show you stuff from monthly, weekly, daily, 4-hour, 8-hour. I mean, you can go as short term as you want. But a 1-bar reversal, so you have to have a high range key reversal. What I call a high range key reversal is, let's say you have a 20-day ATR of 100 pips in euro. The range for that bar has to be at least 100 pips, and you need to make a 50-day low or high, and then you need to close on the opposite side of the prior close. But you also have to have high volume to have what I call a, high range key reversal with high volume. A 2-bar reversal, which I consider to be a stronger signal, is a high volume move into a price extreme, loosely defined as just a 50-day high or low, 50-week high or low. And then the next bar immediately after that is also a high volume bar, but in the opposite direction. These don't happen a whole lot. And when you see these charts, you will understand what I'm talking about. So let's just bring in a chart of just a daily of, say, we'll go to just Euro futures, okay? So everyone can see this?
Yes.
All right. So when I have, little blue, little blue, little blue, little red, this is the volume in the direction of the trend. So I'm defining it as simply 25% above average daily volume, so over a 20-day period, okay? Now, this is what Livermore would call going cautiously with the trend, or what Dixon Watts would call going cautiously with the trend. Now, I'm going to get rid of that so we can see the reversal logic a bit more. All right, so this would be the reversal logic. We're going back here, what's this, 2013. So you can see here, we have a buy warning. Now, let me also say this is not a standalone trading system. This is a tool, right? It's not like this is just set on auto here. So
it's another arrow in the quill.
That's right, absolutely. An arrow in the quiver, right?
Quiver, yeah, quiver, thank you.
So
you
here we have.
I'm quite the archer.
Yes.
I put my arrow.
Dale? Is that what you've taken up during this coronavirus quarantine?
Yeah, but I keep shooting myself in the foot, so I gave it up. I gave it up.
I see what you did.
I've no hobbies.
All right.
This is my hobby.
Yeah, I hear you. This is my hobby. I sit there, I read about guys from the 1800s that traded cotton and try to come up with try to come up with trading indicators for it. So there you go.
Oh, I bet Jimmy Rogers knows that guy. He always talks about cotton farmers. So
that's right. Well, you got to remember my history, right? Family history is the cotton farming.
Cotton used to be able. It would the last hour of the day I would watch cotton and the stock market trade together.
Really?
Yeah, they used to have a little correlation there.
Well, that's fascinating.
Now with all the swab shortages for the coronavirus, I'm going to have to take a look at cotton again.
Will too. All right. So where were we? We were talking about archery and cotton and.
Yeah. Well, you're on with me.
I love it. All right. So here we have. Now I can tell. It might be tough to tell which is, but the skinnier bar is going to be a 1-bar reversal, and thicker bars are going to be 2-bar reversals. So either way, they're both plotted on here. Now you can see this is a 1-bar reversal. What makes them a
reversal bar? By the way they close like above or below the previous two?
Yeah, so here, so let's just go right here. I'll zoom in a little bit. And okay, so the 1-bar reversal. So first of all, on the bottom here this is volume, but normalized over a 20-day period. So it's just like, it's just you have the percentage that it is, against 20 days. So this bar here was 1.84. That means volume is 84% above the 20-day average of volume that day. Okay. So in order to have a reversal bar, I require 50% above the average. So in order to have the reversal bar, you have to have the price reversal bar. So it means you have to make a new low, has to be at least a 50-day low, and you have to close above, the prior day's close. That's just a key reversal, right, in the classical technical sense. But then we add the volume component, and that's it. It's it's a simple indicator, simple logic here. So you can see going back, I have it on line charts, easier to see where the signals are. But you can see here, short signal, long signal, long signal, long signal. These obviously don't all work. These aren't cherry-picked examples. Moving to where we are now.
They don't happen that frequently, do they?
No, and that's the beauty of it. And something else, if it happens all the time, then by definition, it can't be that important, right?
You can't have reversals inflection points every day.
That's right. So what's rare is, by definition has the potential to be important. All right. So yeah, you can just see the signals, right? Now, funny enough, we actually haven't had any signal during this entire crazy volatile space in FX really since February. We actually didn't have any reversals in euro on the daily. Let's go to Australian dollars, and then I'll show you some other great examples. So like here's Aussie dollar. Again, if I put on, so with the trend, right, down, red, with the trend up in blue, get rid of that. You can see, so you can think like Livermore would be with the trend here in Aussie would be with the trend, and then you'd have this big reversal spike up here, right? And then it would start to roll over, and then he'd go with it.
Boldly with it.
Boldly with it, that's right. Cautiously with the crowd and boldly against the crowd. So let's get into a couple more examples. I've got examples on different charts, like different assets here in different time frames. And really what got me doing this was, so, my background, of course, is in FX, but then got into other markets and trading for some funds and doing other things in equities and futures, and really got, I wouldn't say depended on, but really started using volume a lot in equities and in futures. And, in FX, we really don't have, it's no centralized exchange. So it's OTC, so we don't really have volume. So that's why I follow these futures charts to trade spot. So if I get a signal on futures, I can use it to trade the spot market.
Interesting.
Okay.
And people also use COT that you don't get on.
That's right. It's the same thing. Exactly. So you're using COT as a proxy for positioning or sentiment. And, you can use that to make, informed decisions on whether or not, people are bullish or bearish the euro or whatever. Okay. So we're back on the slides. You guys see the slides?
Yes.
Okay. So this is a monthly chart. Okay, and this is one we posted back the end of February. You can see in the whole history of S&P E-minis, right? This is going back to 98, so I've just had this E-mini chart, not cash. We had a sell signal in February. The only other sell signal we had was actually in 07.
Wow.
On a monthly chart. We had a buy signal in 02. Okay, so
Your third signal in 20 years.
Yeah, exactly. Here's the Dow. The Dow actually had sell signal also in February. Again, Dow futures, so YM, and then we had one back in, I guess that was October 2018, yeah. And we had one
before the worst December since the 30s.
Right. Actually, never got triggered on this. Never triggered a buy. It's just, you know, I'll follow obviously NASDAQ, S&P, and Dow futures, but you can see only got sells on this on a monthly chart. You know, it shouldn't be all that surprising, I guess, given the fact that volume tends to be heavier on down moves. But when you do get a buy, I think it's probably instructive to.
How do you manage risk on these?
Well, so again, so it's a tool, right, that I'm using. Right. But
use the high of the reversal for shorts and the low of a reversal for longs as far as a stop loss point.
Well, what I'll do is, so here, let me go back to the other chart real quick because examples will help. All right, so this, by the way, is, this is the Qs. This is Qs weekly. Okay. So you can see some of these bad boys here. But what I'll do is, so let's just say for argument's sake so this is a Euro hourly chart, okay? So we have it on hourly now. Let's say that this day over here was a high volume reversal update. Now it wasn't. Let's just say it was. Within that day, you're probably almost certainly going to have a very high volume hour or high volume bar. So in this case, that would be right here. So on my chart, when it's plotted with like a magenta dotted line, that means it's the highest volume over X amount of periods. And that tends to act as a support or resistance level itself. So what I'll do is I'll look to buy, if it's a bullish reversal, I'll look to buy into that high volume level with a tight stop. Or you can also use this as a volume weighted average price indicator from the low. You can see it's actually followed it pretty well over the last couple of days. So essentially you get the signal, you zoom in, you get more granular, you identify the level within that, and then you trade it. You know, it's not like I'm just going long or short on the close or something. Okay, so back to the slides. All right, so Dow monthly. This is Aussie futures weekly. This is 2-bar reversals. You can see not a whole lot. We've had 3 signals over the last.
Still on Euro.
I can still see Euro as well. Yes.
Oh, sorry.
There you go.
There we are.
I forgot to hit the share button. Okay. Yeah, so here you can see Aussie futures weekly chart. So weekly reversals, again, did not get high volume reversals down here on the weekly, which was kind of surprising to me, but whatever. So you can see 3 signals, right? Now, when I get a weekly reversal or a monthly reversal in something like a commodity or currency future, you know, pay attention. Doesn't happen a lot. This is CAD. Again, 2-bar reversals. Kind of where you'd expect. You know, and again, if you're looking, if people are looking at this and trading dollar CAD, remember this is future, so it's going to be a little different. This is CAD dollar, not dollar CAD. Getting down into a little more short term. This is a 4-hour chart of Aussie. So going back, you can see this goes back to, I guess, October of 2018 or so, or 2019, I guess. And you can see some of the good signals we've had here. Sell here, that was December 31st, the last day of the year, last bar of the year. And then again, this is not you're gonna get false signals here, right? Risk management is always is a key. If you're buying this and you're toast, right? And we did get one on the bottom on the low here.
Okay, I just have a viewer's question since you're there. Does this process work for equities?
Yes, actually,
was asking.
That's really where it came from.
Okay.
So like I said, I wrote that SFO article back in 2008, but back then I was actually using ATR to kind of as a proxy for volume. And it doesn't sound that crazy. If you plot volume in just a 1-bar ATR range, they tend to move together. Like a huge volume day tends to be a bigger range day as well. Not always the case, but when I was developing some equity scans, I started, kind of fooling around with high volume reversal stuff and back-to-back high volume days. And really with equities, what I do is I'll run it on a weekly basis, but the ones I really pay attention to there are the monthly ones. And before this webinar started, I actually was I wanted to see which monthly charts we were going to get big bullish reversals in. So
because we are coming to month end here.
Yeah, and there's a lot of potential ones, because the first thing you have to do is identify the high volume breakdowns from the prior month, and there were a lot of them last month.
Yeah.
So it's going to be a lot. And
the close of the month is a lot different than the beginning of the month.
Yeah, so it's I scan it's over like 10,000 stocks.
Someone's asking this, Jamie. What volume averages do you use on each time frame to determine reversals? Daily was 20.
Yep.
And hourly was 50. Do you use the same for all time frames?
No, so that's a good question. And the parameters are what I've used for just general, inputs as far as a moving average on different time frames. So like on a monthly, it's 12. It's 12. So just, on weekly, it's 13. Quarter. On daily, it's 20. And on anything intraday, it's 50.
Oh.
And those aren't like optimized or anything. They just kind of seem to make sense. And I wanted to stick with it. Obviously, you can play around with it and see if you can find something better. But, 50 on an hourly chart is going to be roughly 2 days.
All right. Let's see. How can you read the difference between XAU and XAU EUR?
That was a previous question. There is also a question about how do you get the volume since FX isn't centralized. He has already answered that through the futures markets. Having said that, there are futures for all currencies. So keep that in mind, guys.
That's right. So I was going to say, and at some point, various market makers probably could use volume if you had enough data, right, in order to do this. It's not a centralized exchange, but if you had a large enough sample size, you could probably, get a good enough read. But yeah, so as far as the currencies, like Steve was saying, you have dollar index, right? You've got, Euro futures, yen, pound, Swiss, Aussie, Kiwi, and Mexican peso. So like, you're not going to be able to do it for like cross pairs, but you can kind of put those together if you have signals in opposite directions or something on yen and euro. You trade euro yen, So here's what I was going to do, because we are coming to month end. I want to run and see what the possible bottoming reversals are, or top reversals are, for the list of ETFs. That might be an interesting thing to look at right here.
There is also a question about its usefulness for natural gas and crude oil?
Well, I will say, I don't know if there's any signal that would be reliable on a bullish upside trigger for natural gas. I think it's been going down forever. But okay, hold on here. Let's look and see what we got here. So, oh my goodness. I mean, literally, like, we're going to have the potential to have like every single, there's just so many high volume signals last month. So yeah, what I'll do is I'll try to do this real quick. Let me go back to the, here, let's go in here so you can see what I'm doing. All right. So, because the month is not over yet, I need to look and see what we're like. Okay, so someone asked about natural gas. Let's pull up a chart of natural gas and see what that would look like. Also, at least with the TradeStation data that I use, the problem with this is that this is, it's not, you know, this suffers from the roll. It's like looking at the ETF, right?
Yeah.
So you don't really have pure data to look at, so to speak. But here's an answer for you. So you had a natural gas signal to buy it on January 2018. You're not going to get one this month because you can see the average for volume this month is only 1.
Maybe it's going to negative 38, Jamie.
Yeah, you ever thought you would have seen that? Here's
No.
you're gonna get a signal to buy. This is a monthly signal. This is UGA, which is the U.S.
ETF?
gasoline fund. Yeah.
Yeah.
So that's what I was trying to look through to see, just maybe some actionable stuff here to see what was going to pop up. There's going to be a lot of them. UGA, USO. Well, that's obviously not because it's not positive.
Is this a new relationship with Scandinavian capital markets, Jamie?
Yes, actually it is. So
okay, I thought I'd get that in there.
Yeah, I started working with them a couple weeks ago, and I'll be helping them with their research portal, Scandex.
Oh, okay.
So
congratulations.
Thanks. So be sure to check out Scandex. We're going to have a bunch of different tools on there to help traders. Rather than just research, we'll have various tools to help traders reach their potential. Is the idea here.
Glad for you, buddy.
Thanks. Let's see. Oh, you're going to get one on XOP, which is the ETF. Good. We have the volume a little low. Okay. So XOP is the ETF, right? For oil and gas.
Okay.
You can see we're going to get a buy signal this month on that.
Big volume on the way down, big volume now on the rebound.
That's right.
Yeah.
And again, this is a monthly chart, so this is longer term. You've had, you've had some. You had one back in the 2016 crisis, March 2016. Had one in February 2015. You had a couple back in 2009. So
some of them never looked back. How about the fact that the magnitude of this is so large that from a tactical standpoint, perhaps you look for some type of fib retracement of wherever this
that's right. Well,
initial run stops.
Yeah. So the question you asked earlier is like, how would I trade this? So all right, we have this XOP reversal here. So now let's zoom into this a little bit. Okay. And let's see. Okay, so here's XOP. Here is the volume weighted average price from the low right here. Okay. We're actually coming into 2020 volume weighted average price. Like right now, I would actually expect this to provide some resistance right here.
Yeah. Gaps, everything. Yeah.
Yeah. So what I'd be looking at, is you kind of let it marinate a little bit, see what happens as you get into May, June, whatever, and eventually you probably want to be trying to buy this when you're getting into volume weighted average price from the low to provide support.
Nice.
So yeah, absolutely.
Great look.
Jamie, I know that you've, through your career, you've used several tools. You've used extensively Elliott waves. You've used Pitchforks after that. You're now doing, extensive work on volume and how it affects, in essence, reversals. Do you still keep using all of them by combining, in essence?
Absolutely. Absolutely,
yeah,
Steve. So
that's what we do in Forex Analytics as well. I mean, we try to combine, several types of analysis, to get, whenever we get like a common signal in the same direction, we trust it more. That's a concept.
Guys, I've been doing a lot better since I integrated my 8-ball into my trade.
That's right.
Yeah, that's our main indicator. His 8-ball.
The magic 8-ball.
I shake it a few times.
So all right, so let's Steve's point here, let's take a look at. So here's using Pitchfork or Trendline analysis along with this, right? So this is a specific setup right here where you have your original channel, right? And you break out of the top of the channel. That means you're no longer in a correction. Now, the top of the channel often acts as support on the way down, and that's what's happened. Now, you can come back to it at some point in the future, and it should be support again. This actually happened with the British pound just recently. And let me bring in that chart, if you don't mind, if we have time.
That was a great question, Steve, because, a lot of people jump from methodology to methodology instead of building upon.
That's right.
One that they've mastered.
That's right. The whole idea is to build something, build a process, right? Develop a process. All right, so here's that British pound chart, and keep that picture in your head of what I just showed you. And this is the beautiful thing about technical analysis. It does not matter if you are looking at the price of XOP on a monthly chart or an hourly chart, or the British pound spot price here, okay? It's the exact same price behavior. Look what we have the original channel right here, right? Original channel, first two lows off the high, you break out the top, you're no longer in a correction. You come back and you test it, that's support. Break through it, now you watch for it to provide resistance, and guess what? There's resistance, okay?
And I also see that you've marked it as an ABC and as a likely ABC correction lower.
Yeah, this is what I'm looking for. And again, this is, one of the misnomers, I guess, about Elliott is that people think it's trying to predict what's going to happen. That's not the case. It's trying to find, at least for me, it's trying to find levels to trade, and Elliott gives it context. So it's like, coming into a B wave high here, I'm fine with selling that, because the idea being, if we're right about a C wave, we should turn relatively quickly, right? And we did. But this is a combination. You can see here, you had, as you mentioned, Steve, you've got the wave count. Okay, fine. But you've also got some Pitchfork analysis, simple levels analysis, whatever. If I wanted to take it another step further, I could zoom into, a short-term chart here. And when we were trading into that high yesterday morning, we were getting all kinds of heavy volume. And this is a 30-minute chart now, right? We were getting 30-minute sell signals on the way up, right? 30-minute sell signal here, 30-minute buy signals on the way down here, back on the 21st. So that really is, you can see how combining all of this information to make an informed decision.
Before, if you're done, Jamie, before you go, outside of the methodology completely, what would be your highest conviction trade be at the moment? At this current juncture in time, I mean, what do you feel strongest about based on, your analysis?
That's a hard question because when you ask it, it's like, well, time frame one, right?
You're absolutely right. Okay, let me rephrase it. Let's say for the month that's coming ahead.
Okay. I'll tell you what, I believe, but I want to check something first. So first of all, we just looked at the British pound. So we're coming into the seasonally weak period for the British pound, right? May is historically a really bad month for the pound. I tell you what, though, my favorite setup, long-term set, and it's been, I've probably talked with Dale about this.
The bonds?
Probably a year ago. It was dollar yen.
It's called that TLT rally.
Right. Well, so that's done with, right? That's played out.
Yeah.
But it's probably, and this is a long-term chart, but it's probably this dollar yen trade idea. So
lower yen.
Yeah. So I have this as a big A.
Yeah.
Finishing a huge B.
Yeah.
And eventually we're going like mid-90s on dollar yen.
Okay.
Right. Now,
yeah. That would obviously coincide with the nice picture we have in treasury yields. We see a triangle, a likely breakout from the triangle to the upside, and then a reversal.
Yeah.
I'm into the treasuries because the yields are the exact opposite. So perhaps one spike lower in yields and then a reversal and US yields going higher, right?
Well, here also, if we look at
and maybe a pullback in the S&Ps while that happens. From here, we took out 61.8 here.
Yeah, S&Ps were actually testing a.
I'm trying it.
We're testing a big spot here at S&P. So this is 2020 volume weighted average price right here, that thick line. We're right at it.
Yeah.
Now we're still within this channel. This is actually, so this is a good example too. So this is a 4-hour chart. And you can see, if you can see it, I know there's like a lot of stuff going on here, but we had a sell signal on the 4-hour chart back on February 13th, right here.
Mm-hmm.
We had a buy here. We had a buy here, so we've been a little early. We had a sell. The last time I tried to short was over here. Now that hasn't worked. That's not worked out. So what I'm doing is I'm waiting for it until I get another 4-hour sell signal.
Okay. Why don't we wrap it with this, Jamie? How to join this methodology? Are you still teaching this, or do you still have SNB going, trade desk?
Yeah, so I'm still writing stuff at SB Trade Desk, and I'll be writing stuff at Scandex. I would be sure to check out Scandex because we're going to have a bunch of different features and things coming out.
Spandex.
Scandex.
I didn't think. Oh, I thought you were trading wearing spandex, Jamie. All right. Anyway, look, I'm
Dale, how long have you been up?
About 18 hours. Anyway, so Jamie, thank you for coming here. I wish you a lot of good luck with your new broker and appreciate you being part of the summit. And you could also follow Jamie on Twitter at his name. So at Jamie Saettele. And really thank you for, being part of our first day here, Jamie. Nice presentation.
No, thank you for having me. This was wonderful. And real quick, because I'm a screen hog, and I think this is important. So on that dollar, Steve was asking about what I like here. Again, this is a longer term idea, right? I don't know what's going to happen today, or Fed coming out.
The fractal
but this here, so this black.
Yeah.
Okay, this is the yield spread. This is U.S. Japanese U.S. 10-year minus Japan 10-year yield spread.
Oh, okay. Wow.
Okay. Now, dollar yen, if it was trading on the yield spread,
would already be there.
Should be at like 75.
Yeah. Wow.
So this has been going on for a while. Now, for whatever reason, the relationship between the yield spread and dollar yen broke after the August low, which was, last year, that kind of panicky low we had last August, right?
Okay.
So I don't know, this adds a little more fuel to the fire as far as the idea of dollar yen going to the mid 90s, in my opinion.
Okay. Nice look. And, the correlations have broken down with the yen on almost everything,
Yeah, I mean, absolutely, it's not the risk on, risk off, so to speak, scenario, and it hasn't been for a long time, I guess. But the one thing that does tend to move together over a longer period of time is gold and yen, right?
Yeah, so, and that's divorced.
Yeah.
A bit. So anyway, Jamie, hope that you and your family remain healthy. And thanks a lot for coming on today and edifying people that showed up for the summit. They'll be there on video too. And good hunting, my trading warrior brother. Till next time.
Great day.
Absolutely. Thank you guys so much, and have a great rest of the event for the next day and a half or so.
You do, Jamie.
Okay, Jamie.